Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Yeah, Friday. What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. Hope you guys are having a great week and really not trying to jump in front of this train as it is moving fast. As the S&P, the Dow all had essentially their worst day in history yesterday. You know, looking at this on a daily chart, we can see very, very strong moves down yesterday. You know, yesterday I genuinely felt like we would get a little bit of slowing down at this point. You know, my caution to every single one of the traders in our live trade room yesterday was that any demand level down below us, and we had a few down here, but they broke through because they're only confirmation entries. We have a number of demand levels below current price. All of these lines that are drawn down here, but every one of those demand levels has to be considered a confirmation entry only at this point. And even that may not last for very long, as we're seeing very, very strong move down. Now, looking at this I'm going to go much bigger scale. I'm going to jump out to the weekly chart. And the reason I'm going to jump out to the weekly chart, the monthly chart, I'm going to jump out to the monthly chart in the S&P and take a look at where we may see some monthly demand. And I think, you know, this is a big red candlestick, no question, right? Looking at this big red candlestick that we have here. It's not all that much bigger in size than the one we had in December of 2018. November, December of 2018 were also very, very big red candlesticks. And as far as the amount that we've moved down this month from a percentage scale, you know, we've had a very, very big move down this month. We're down about 12.5% this month in the S&P, right? 12.7% in a month. You know, even going back to like the crash of 08, our months, you know, this was a 28% down month, right? So October of 08 was a 28% drop in the market. So my point is that what I'm saying, yes, it's been a terrible week from all perspectives for long-term investors, people holding 401ks, all of that. Been a very, very difficult week. However, the thing to consider is that you know, I was just talking to somebody today, you know, selling right at this very moment, you're selling at the peak of fear, right? And one of the things that I go back to from an investment standpoint is, do I think that there's more that we can fall? Yes, I do. But I think that we've got a little bit of monthly demand here where we may see a bit of a bounce. Now, does that mean that that bounce is gonna hold and be and come back up and send us to new all-time highs? I'm very suspect, just due to the upper wicks that we have here. These upper wicks are frankly what scare me the most. We had we had a pretty big upper wick on the candlestick here for our January candle. We had a shooting star, and then we had a higher upper wick on this one, indicating a ton of selling pressure and the inability to hold on to any of our gains. So I'm interested to see what this area of demand down here does in the S&P on the monthly time period. You know, would I be overly surprised if we pulled all the way back to here? This is really my cleanest monthly demand. You know, and in this case, you're looking at from the highs, that would be about a 35% decline in the S&P. To me, that's our, you know, aside from here, that's our next cleanest monthly demand. I mean, we have this area in here, which is a retest of this area to the left. This, I think, is a fairly clean monthly demand. So from a big picture standpoint, keep that in mind. Looking at if we break through here, we may see a small rally back up, but then I think that this becomes a very viable price target. So I'm looking at that from the big picture scale. And I know we normally look at the small time frame here on the Daily Market Commentary, but I wanted to at least bring that up and share that with you. Really quickly, by the way, if you are interested in our live trade rooms, we have a free preview week coming up next week. Go to tradersarmy.com today, become a free subscriber, and you'll get information on how to join our live trade room. We're actually going to have it starting Sunday night. So Sunday night is where we'll kick off the live trade room. You're welcome to join us. All right. So let's look at our smaller time frame stuff for the day. So the ES on an hourly chart. Here was that level I thought that we might sell, that we might gain some support yesterday. I left it on the chart because I still think that old demand can become new supply, and we could pop back into this area and it can act as a resistance point. So keep an eye on that for today. Any longs that you want to take, in my mind, have to be the breakout longs to the upside. You've got to take breakout longs as they show themselves to the upside, and we have short area up above us. So I like that 30.27 by 30.50. It's a little wick over wick zone in here on the hourly chart. If we get kind of an end of Friday short covering rally, it doesn't mean that we're out of our downward trend and our bearish market continues. In the NASDAQ yesterday, we had a really nice 15-minute entry. For those of you that got this trade, this one was a very strong entry into the position, and then we got a very nice move away on the short. So if you were in the live trade room yesterday, you got that one. Hopefully that one worked out for you pretty well. You held on to it the way down. We hit a couple of demand levels that were confirmation longs that did not meet entry because they didn't have confirmations. I left this one on that we hit in the overnight hours as it's rallied up off of that level. Now, obviously, we're not going to use that again, but just to kind of look and see, okay, we did get a bit of a bounce here in the overnight, as we're continuing that move back to the downside. I would look and say, keep an eye on this area here for a potential area where we see the market reverse. So if we do bounce up a little bit more this morning, keep an eye on this area up here for a potential reversal point, and it might be a candle-to-candle style of trade if we bounce back up to this region in here. Looking at crude oil, another one that yesterday we had our entry for our short, so our 15-minute short level from the live trade room. Also, big move away. So if you guys caught that in the live trade room, please leave me a comment down below. Let me know. Once again, you're going to want to join our live trade rooms. The next week's free preview week, we are finding some of these opportunities as the market has rallied into some of these supply levels. Looking at what I see now coming to this smaller time period, I've got this little level in here. Not a great time of the day, however. Formed at 8:30. 8:30 is kind of one of my least favorite times of the day to look for levels, but I want to see if we find some overall weakness. So sliding here to the hourly chart, remember that oftentimes you're going to get in on not on the retests but on breakdowns, and a breakdown could occur at any of these levels. Now we've come close to my target. My target in oil that I talked about a couple of weeks ago was this 44 to 42 area, and we're just about back to that region. So let's see if we get to that region, if we get a little bit of a bounce, because that's really where our daily demand lies. So a couple of them are near that daily demand point, but look up above us for some supply if price rallies back up. Gold, yesterday we actually talked about a gold iron condor between 1,700 and 1,600, and when we looked at that yesterday, gold was at about 16. I think gold was up here at about 1650. So we had huge points one way or the other. Now the iron condor was an 8-day iron condor, as gold hadn't really been doing all that much. It had kind of been going sideways, and then yesterday we got a pretty decent sell-off in gold. Interestingly enough, that we got the sell-off in gold, where did that cash go, right? Now, we've still not come to any major supply or demand areas, and these gold levels all look too thorny for me. The wicks are just sticking out there in areas that I don't want to lean on. So I'm not gonna pick a directional position in gold. I think there's enough other markets that give me better, cleaner looking levels and probability. But I am getting a ton of selling pressure. So if you really want to give it a shot, I think you're okay shorting on some sort of a breakdown below this region. Looking at bonds as well as currencies. So in our ZN, the ZN is really continued to rally higher. We've gotten a lot of movement in the bond markets. as we're seeing that we got this high up in this region here, getting a little bit of a pullback over the last little bit. Our 4-hour in our bonds continuing to rocket straight up. The question now becomes, when do we have some sort of, history tells us, recent history tells us that there's a good chance that that we will have some sort of pressure from the White House to stimulate the market when it goes down this far. The Fed, the government, they're going to do what they can do to stimulate this market, and what are they going to do with bonds in order to get there? So for now, I've got a clean demand level in here. Go into a smaller time period, say this 15-minute chart. If we pull back a bit further, you've got a couple of levels in here, but none of these are time of day that I like to really lean on. Here's a right in here is our European market open time of the day, and we've rallied up and sold down. So I've got a clean level down here that I really do like. We've got a little level here that was formed yesterday around bond market close, but nothing here for me to really jump ahead on. And so I think it could be a good opportunity to sell bull put spreads for those of you that do the bull put spreads underneath those bonds. Looking at the Aussie, so our Aussie trade yesterday, we did a video on wick over wicks. If you have not seen the video on wick over wicks, I'll throw a card up so that you get a chance to watch it. Please learn how to trade these wick over wick levels, because this was a beautiful touch and go off of the wick over wick level with a very strong move down. Now, if you say, well, Chuck, 6 candle rule, 1, 2, 3, 4, 5. After 6 candles, it hadn't really gone anywhere. Great. So you take your stop, you move it to break even, and now the trade really has moved off, and now it's gone somewhere, right? We really saw the big move down happen in the overnight on this one, as we're continuing to see more and more coronavirus fears, and they're affecting especially the Asian economies even more. So while I wouldn't normally wrap my lines around a wick over wick level at 7 or 8 p.m., I think there could be some validity to this one. Now, the one that we got the good move off of, and once again, that was from the live trade room. If you caught that one, leave me a comment down below. I'd love to hear it. Would look for this area up in here. In the euro now, where we did great in our Aussie trade, not so much in the euro trade. In our euro confirmation short, we blew right through it for no entry, and then it kind of came back down. And then we had the next level up here up above. Now remember, every supply level is a confirmation entry, so we just recently blew right through that one and came up to this 15-minute level, and that did actually give us a little entry if you want to take it. I'll be quite frank, I don't think most people took it if you're living in the U.S. because you were probably asleep, and it didn't set up for a truly great level. But we've pulled back a little bit, and there are 2 areas here where we may see potential reversals if we continue to fall. You've got a wick over wick level right here, and then the origin of this move up, which was from a breakout. They're right around European market open levels. So I'm going to leave those in place. I think those are both pretty good little areas on a pullback if that pullback continues to move down. Canadian dollar, we were very bearish on the Canadian dollar. We did get a strong move down on our Canadian dollar yesterday. Every single demand level, once again, is a confirmation entry. So none of these demand levels gave us a reason for entry. And if you guys need a video on confirmation entries, if you don't know what those are, I can do a short video on those and point you to where that video is. We've already done one. So here would be our next level of supply, 74,803, 74,883 for some sort of a rally back up in here off the Canadian dollar. We've hit a little demand point here on the Canadian dollar, and that demand point that we've hit, we may see a little bit of a pop up. I think our longer term opportunity is a bit lower even in this demand zone. So this demand zone that we're bouncing off of, once again, would have to be a confirmation entry, and we're basing in front of it. So I've got to remove it at this point. All right, Great British Pound and Japanese Yen. So the pound is kind of leveled off a bit. I was looking at the pound yesterday as a potential, and we really just kind of leveled off and haven't done much of anything. I was looking at this for a candle to candle short, this level yesterday, and we got the entrance was right here, and then as soon as that candle closes, you take your stop and move it to here because it's candle to candle, and then you get popped out. And so really it's gone nowhere. I still think the better moves are to go down, and so if you want to look at this area here for a potential breakdown trade, that is still a plausible entry for a short breakdown. Japanese yen is rocketing straight up, whereas the other currencies are really fallen. The yen is rallying, and so looking for pullback demand areas, I think this is the best pullback demand area we have in the yen, primarily because it's a former area of resistance here in the past. And so if we get a pullback into that region, I think that one makes the most sense. Now, remember, gaps are always a concern in this market environment. So be aware of the gaps and the gaps that can affect your trades, and don't jump in front of a moving train. So if you guys have any questions, please feel free to give me a call. Go to tradersarmy.com. The website has the support text number if you want to give us a text. If you want to join for our live trade rooms this week in our free preview week, we'd love to have you. Go to tradersarmy.com today. Sign up for a free membership. But I hope you guys all have an amazing weekend, and be aware of gap risk. I will talk to you soon.